Okay, here comes video on Wednesday, the 27th of July 2022. It's just gone 8:16 p.m. Chicago time. Do hope you are doing well, and I hope your trading is going well. So it's pretty late to be putting out a video. Apologies for that, but today was a super important day in the markets, and I wanted to mark it with a video. We've had the BTHAT signal from 10-11 days ago. That big things happen at triple signals on the Emini confirmed with today's activity, and we've broken into a confirmed uptrend. We've also got that on a whole bunch of the different equity indices, and the Forex markets have also changed trend today. So we've got the dollar index starting to come off, and we've got things like the euro, British pound, yen, and so on going up. So I want to show you what I'm seeing on my charts. But before getting to the charts, I want to weigh in on this current hysteria of the definition of what is a recession, and has the White House changed their definition of a recession in order to make them look less bad. So typical kind of mass media type outrage going on here, and this issue is really quite simple, and I'm sure most of the listeners to Emini-Watch are kind of aware of this, so forgive me for kind of putting out my 2 cents worth. And if you can hear the banging in the background, that's the damn neighbors who have decided to renovate their beautiful house for whatever reason, and the builders are in next door doing a hell of a job taking the thing apart. Anyway, let's talk about recessions and definitions of recessions. So the NBER are the people charged with determining whether we're in a recession or not. That's the National Bureau of Economic Research, I think they're called, or researchers. They determine, based on looking at all of the economic numbers that kind of come out, whether we're in a recession or not. They look at GDP, unemployment numbers, CPI, blah, 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 blah. The problem with the NBER, they're good people, but they're very slow. As an example, this is a quote, I think this is from the Washington Post yesterday or today, talking about the last public pronouncement of the NBER committee was in July 19th, 2021, where they confirmed that there had been a recession between February and April 2020, the shortest one in US history. Problem with that was, what is that, 15 months after the fact, the NBER weighs in and says, yes, we can confirm 15 months ago you were in a recession. Well, frankly, that's no good to anybody. It's good for historians and people kind of confirming recessions and so on, but in real time it's no good at all. So, as a shortcut to this, what people generally do, economists generally say, if we have 2 consecutive negative GDP prints, typically we go into a recession. Now, it'd be good if the NBER people came out and said, look, of the last 25, 50, whatever, 2 negative consecutive GDP prints, what percentage of those ended up being recessions? And it's probably something like 85% of those instances ended up being real recessions. So for a quick and dirty, we can say it's very likely that we are in a recession after 2 negative GDP prints, but we'll give you the real answer, in a year and a half's time. So in some ways the White House, I hate to say this, is right. We haven't entered a recession until the NBER people confirm that we're in a recession. But they're also being idiots for not saying, look, it's not good, the economy is weak, chances are we are actually in a recession. So they're kind of shooting themselves in the foot, but what do you expect? So that is the real answer behind this, that the negative GDP prints is just a shorthand way of figuring out whether we're in a recession, because the NBER people take a year plus to decide that fact. Now, do I care? No. Should you care? No. This has got nothing to do with the markets, and today's activity is kind of classic. While the mainstream media, the politicians, the economists and so on are arguing over whether we are in a recession and the economy is heading down, meanwhile the markets are heading up. And that is because we work in 2 different time frames. The markets are forecasting mechanisms, and we're looking out 6 to 9 months. The real world people are working in the economy of today, and they're trying to figure out whether things are going to get worse over the next 6 months. And we know that the equities markets all peaked in December, January of this year, and we've been down, down, down for 6 months. So the economy in 6 months' time, starting now, is going to be down, down, down for 6 months. So that's what's going to happen. But with the markets turning up today, it reflects the fact that in 6 months' time, in the real economy, monetary conditions will be loosened in order to get into risky assets, and the markets are forecasting that that is what will happen. And so that's why the US dollar is coming down. Monetary conditions will be looser, and that the riskier assets, equities, non-USD, Forex markets and so on, are rising. So there we go. Let's look at some charts. First thing I'm going to do is just remind you, this is the video that I put out on the 16th of July. Big things happen at triples. So if you want to go back and check out the video, that's the one to look for on the Emini-Watch channel on YouTube. So this is the signal that we got today. You can see with a break above resistance, the first bar here, today's daily bar, we've broken into an uptrend. So this is the activity, this is the triple signal. In fact, it was using the @ES.D, so that's day session only. And you can see here, this is the triple, where we have all three supports in red. SR1, 2, and 3 are in red. That shows we have 3 supports in a row. Big things happen at triples. We either get breakdowns of this into big trends, or it bounces off supports here into an uptrend. And on the continuous contract, this is the first break above resistance that we've had with a close above resistance. That breaks us into an uptrend. So that means that this is going to run from the pullback level to the end of trend. So until this thick line on better sine wave here at the bottom crosses from this bottom, where it rises up to the top at 100, the fast line, the red line, goes to 100 and then crosses below the blue line, which will be following up the slow line. So where this goes is interesting. You know, we're going to be testing into the highs up to 4,800. From that BTHAT signal of 10-11 days ago, we're already up 150 points. So this is breaking into an uptrend on this daily chart, and I would expect this to run till we get a similar pattern on the way down, you know, a pullback to end of trend on the daily chart with resistances on the intermediate and the highest time frame. Now, it's not going to be a straight line up, never is. We're going to have down days and up days, but you know, I think what we're going to do is we're going to play this thing out, and it's going to surprise people and kind of head to the highs. We've also seen it on a whole bunch of the other markets. This is the NASDAQ down here. I talked about this in the last video, that the NASDAQ pattern was super nice because all of those support levels came in really close. When we have tight support levels like that, I really like them for a signal, and they held. Pullback to end of trend on the daily chart. It was a pullback and an uptrend on the highest time frame, and a pullback to end of trend on the intermediate time frame. Bang! And that one broke into a confirmed uptrend almost immediately there. So we've had, you know, what is that, 10 bars of uptrend on the NASDAQ. Dow, same thing, pullback to end of trend on the daily chart, triple signals kind of going on there, a couple of them, you can see one there and one there, and now with today's activity, bang, we've broken into an uptrend on that chart there. And lastly, the Russell. Russell was a little bit weaker, you can see here the lines are further apart, but that's a triple down there with an end of trend, and we've broken into an uptrend here. So all of these markets have kind of turned around. On the lower time frame charts, we've also got a triple going on kind of in the other direction. So I'll show you this on the 15-minute chart. So this is how you can use triples, where I say they kind of big things happen at triples, big breakdowns or big breakouts. And here on the 15-minute chart with today's activity, we've had a triple. So here we go. All three support resistance lines are resistance lines. They're all painted white. They're super close together, and we've broken above them. So this means this is a breakdown in those levels, that this will run into an uptrend. So this will go until we see pullback to end of trends, certainly on the low, probably the intermediate, and let's see if we go on the highest time frame on the 15-minute chart. Big thick lines there will have pullback to end of trend. So this is the beginning of a big uptrend. We're breaking out of that resistance area on the E-mini at 4,000 or so, and we'll see where this goes. But this should run until we see, you know, the opposite of what we saw at the bottoms. At the bottom we saw pullback to end of trends. Here we go, low, intermediate. We see exhaustion, sell signals, bullish divergence and flush signals, more exhaustion, sell, bullish divergence. We need to see the inverse of all of that on the high side. So we're breaking into an uptrend on the 15-minute chart, and this needs to run till we see the pullback to end of trend patterns with exhaustion, buy, and bearish divergence and so on. So it's an important day there on the equity indices, and we've broken into an uptrend. We've also started to break into uptrends on the Forex charts here, and you can start to see this on the euro. So here I'm looking at the 1500 tick bar chart and the 4500 tick bar chart. I use the two together because I really like the professional signals on the 4500 tick bar chart, the higher time frame tick bar chart. When I see blue professional bars down at the lows, kind of buying the lows, that's super important. We bust above. There was only one there, but coming into those lows, you can see on the lower time frame a whole bunch of blue professional bars. We test bullish divergence, exhaustion sell, bullish divergence. We get a triple signal because all three indicators are going in the same direction. We're oversold on price, we've had an exhaustion sell and bullish divergence, and we've also broken above the trailing stop of the professionals. So we've broken into an uptrend here at 102 on the euro, and that's likely to be a change in trend, an important one, where we start heading up. The pattern in the British pound, I've been talking about this over the last some videos ago, that I was kind of surprised that we had the strength in the pound kind of earlier than the euro, particularly after all the Boris Johnson business. You know, there seems to be kind of political uncertainty in the UK, and yet the pound was rallying really hard. So we had our signals kind of back here, 17th of July, and you know, we've had strength in the pound ever since. We've got more signals kind of going on here on the higher time frame, on the lower time frame, and we're just busting up. Japanese yen, today we had signals, so we kind of bottomed similarly to the British pound. We were bottoming around the 14th or 15th of July, and then Japanese yen, same thing, 14th, 15th July, we kind of bottom. No blue professional bars right down at the bottom, but we did have a whole bunch of activity kind of coming out here as we started to break into that uptrend, and so we've had some signals on the daily chart where the blue professional bars have stepped in the last couple of days, kind of forced that up. And then because those currencies are going up, you'd expect the dollar index to be going down. And I know the dollar index, we're kind of at the bottom of the pane here of the chart, but we've got triple signals going on here. We've got the highest time frame doing the same thing. Whole bunch of blue professional bars with today's activity at those highs, exhaustion buy, bearish divergence on the lower time frames, and we're kind of rolling over there. So dollar index, let's see if we bunch that up. So yeah, it kind of peaked at the 14th, 15th, but with today's activity, finally we got recognition that the dollar index is weak and going to weaken, and all the other kind of Forex contracts are going to strengthen. So I think that could be interesting and run for several weeks. Gold also, again, kind of looser economic conditions in the future would be good for gold. So we started to bottom in gold, talked about that on the weekend's video. We had exhaustion sell, bullish divergence down here. We had triple signals, whole bunch of blue professional bars buying at 1700, kind of 1720 down here, and we're breaking into an uptrend on gold. Had the first little stair-step trade there. Sorry, my voice is getting a little bit scratchy at the moment. What have I got next? Bitcoin again, kind of bottomed down here a couple of days ago with exhaustion sell, bullish divergence. Not many blue professional bars kind of down here. They came in with today's activity and seemingly are buying that breakout. So slightly different kind of pattern than the others, but we got strength in Bitcoin. And then lastly, crude. Is this the last one I'm going to show you? Yep, it is. So crude, I'm not sure. Down at the bottoms here, we've not seen blue professional bars, but when they tested into 96 here, they did kind of grab it, and we've had a signal on the lower time frame here, uptrend signal, kind of as crude's kind of hitting up 98. So let's see. There's a lot of professional activity there, and we did break through those. So let's see if that kind of continues higher. So there we go. As I said, an important day in the markets. I think this is going to be the story for the next several weeks, and we'll see where this takes us. Remember, nothing is ever a straight shot. There's going to be up days and down days, but I think just directionally we're going to be moving up on some of those markets and moving down on the dollar. So let's see how that all kind of turns out.